Hello everyone, this is CACS Sayakash from Hubli. So let us continue with the series of Income Tax Act versus the proposed new Income Tax Bill 2025. So even before we start, at the outset, I would like to thank my YouTube community for showing so much love and affection. Even though I am not a content creator, I am a practicing professional. The kind of support that YouTube is giving me, all my viewers, thank you so much. Subscribe to the channel and you'll be updated with more such videos. So today let us discuss the capital gains under the new income tax bill 2025. So let us discuss in comparison with the existing income tax act, what are the changes in the short term capital gains, what are the changes in the long term capital gains from share market or also otherwise. Let us start with short term capital gains from share market. So basically section 111A of the existing income tax act 1961 deals with this, wherein any capital gain arising from share of transfer of equity shares or equity oriented mutual funds or units of business trust, and wherever applicable STT has been paid, and if the period of holding is less than 1 year, then the tax rate applicable is 20%. So previously before budget 2024 it was 15%. Now they have increased it from 15 to 20%. So if you are transferring on or after 23rd July, the current short term capital gain tax rate is 20%. And under the proposed income tax bill, section 196 is the corresponding section which deals with this short term capital gain from share market. Again, the tax rate has remained unchanged at 20%. So even in the new income tax bill, the tax rate for short term capital gain from share market remains to be 20%. Again, only for resident individuals and HUFs. In the existing act also and in the proposed bill also, if you have any unutilized basic exemption limit, that you can set off against this short term capital gain, but no chapter 6A deductions are available against such income. So chapter 6A has been replaced with chapter 8 under the new proposed bill. So if you are an individual, resident individual or an HUF, and if you have only income from this source, so your unexhausted basic exemption limit, so basic exemption limit applicable is now 4 lakhs. So if you have short term capital gain of say 5 lakhs, in that you don't have any other income, so in that case unexhausted basic exemption limit is 4 lakhs, and only on the remaining 1 lakh you need to pay tax at 20%. So that is the benefit given. There are mostly no changes under the proposed bill as well. So income taxation from the perspective of short term capital gains from share market remains the same. Continuing with the next head, wherein long term capital gain from share market, governed by section 112A of the Income Tax Act 1961, and the corresponding section under the new bill is section 198, wherein any capital gain arising from transfer of equity shares, equity oriented mutual funds and units of business trust, and wherever applicable STT has been paid. In that case, in excess of 1.25 lakh rupees, whatever is your capital gain, then it will get taxable at 12.5%. So previously again, this was increased with respect from budget 2024. The same thing has been carried forward in the proposed income tax bill 2025 as well. So even in this case, whatever is the capital gain in excess of 1.25 lakhs, that will be taxable at the rate 12.5%. And for resident individuals and HUFs, whatever is your unexhausted basic exemption limit, that is available, but chapter 6A deductions are not available. Also very specifically 87A rebate is also not available. 87A rebate, now this time the government has made it very clear, they have written it in the law itself that 87A rebate is not available against this income. For that matter, any special rates of income. Even under section 198 of the proposed income tax bill, they have very specifically mentioned that rebate under section 156 is not available against this income. So the rebate under 87A is now available as a rebate under section 156 under the proposed income tax bill 2025. So again, in this case, what could be a good tax planning? So unexhausted basic exemption limit is 4 lakhs and the capital gain limit is 1.25 lakhs. So basically up to, if you have capital gains from share market up to the tune of 5.25 lakhs, then you will not be liable to pay any taxes. Only capital gain arising in excess of 5.25 lakhs, then the excess would be taxable at the rate 12.5%, assuming you don't have any other income. So that is the conclusion of long-term capital gains from share market under the proposed bill. Moving forward to the next head, wherein long-term capital gain from sale of other assets other than capital gain, may it be your sale of land, sale of building, sale of gold or any other capital asset. In that case, the holding period should be 2 years. So if you are selling it after a holding period of 2 years, then it gets taxable under the head section 112 of the existing Income Tax Act 1961, and the corresponding section under the new bill is section 197, wherein the tax rate is again 12.5%. The same tax rate has been continued in the new bill as well at 12.5%, again only for resident individuals and HUF. Unexhausted basic exemption limit, if available, you can utilize it against this, but no chapter 60 deductions are allowed and no rebate is also allowed. So even though your income is less than 12 lakhs but more than the basic exemption limit, if you have capital gains, then long-term capital gains, then in that case you cannot take the benefit of rebate. You have to pay tax even though your total income is less than 12 lakhs, but it should be more than 4 lakhs, the basic exemption limit. And specifically to address one issue, for land and building acquired on or before 23rd July 2024, that is on the budget date of 2024. In that case, an option is given to only resident individuals and HUFs, wherein the tax rate that is applicable is 12.5% without indexation or 20% with indexation. So this is applicable only at the time of payment of tax and not at the time of calculation of capital gains. And if at all after taking the indexation benefit it is resulting into a loss, such loss cannot be set off against other income and such loss is not allowed to be carried forward. So apart from this, majorly there are no changes under the head capital gains. The holding period will remain the same. The taxation of short-term capital gains will remain the same. Short-term capital gains from others other than share market is taxable under the slab rates, and the same has been carried forward in the new income tax bill as well. So if you have any specific queries, write down in the comments and do subscribe to our channel for more such videos. Thank you so much. Have a great day.